Did you know that most Forex traders don't lose money because of bad strategies? They lose because they ignore a few simple rules. They risk too much. They trade based on emotions, and they refuse to accept small losses. Eventually, they blow up their trading accounts. In today's video, I'm going to share the Forex trading rules that every successful trader follows. If you're new to Forex, these rules could save you thousands of dollars and years of frustration. Let's get started. Before we begin, this video is for educational purposes only and should not be considered financial advice. Forex trading involves risk. Always do your own research before making any trading decisions. Now, let's dive into rule number 1. Rule number 1. Never risk more than 1 to 2% per trade. One of the biggest mistakes beginner traders make is risking too much money on a single trade. Let's say you have a $1,000 trading account. If you risk 20% on one trade and lose, that's $200 gone instantly. But if you only risk 1%, your loss is just $10. Professional traders understand one thing. Your first job is not making money. Your first job is protecting your capital. Because if you protect your account, you'll always have another opportunity to trade. Ask yourself this. Would you rather try to get rich overnight and lose everything, or stay in the game long enough to build real wealth? Remember, trading is not a sprint. It's a marathon. Risk management is what separates professionals from gamblers. Rule number 2. Always use a stop loss. A stop loss is your safety net. It automatically closes your trade if the market moves against you. Many traders avoid using stop losses because they believe the market will eventually come back. Sometimes it does. Most of the time,
And one bad trade without a stop loss can wipe out months of hard work. Think about it like wearing a seatbelt. You don't expect an accident, but if one happens, you're protected. The same principle applies to trading. Never enter a trade without knowing exactly where you'll exit if you're wrong. Protect your downside. The upside will take care of itself. Rule number 3. Don't trade with emotions. Fear and greed are two of the biggest enemies in trading. Fear causes traders to close winning trades too early. Greed causes them to hold losing trades for far too long. Then there's revenge trading. You lose a trade, you get frustrated, and suddenly you're taking random trades trying to win your money back. This emotional cycle destroys trading accounts. Successful traders understand that losses are part of the business. They don't panic. They don't chase the market. They simply follow their plan. Remember this, the market doesn't care about your feelings. Discipline beats emotion every single time. If your emotions are running high, step away from the charts. Come back only when your mind is calm, clear, and focused. Because in Forex trading, mastering yourself is often more important than mastering the market. Let me ask you something. Would you start a road trip without knowing where you're going? Probably not.
but that's exactly how many people trade. They open their charts, see the market moving, and jump into trades with absolutely no plan. That's not trading. That's gambling. Successful traders plan everything before they enter a trade. They know exactly why they're taking the trade. They know their entry price. They know where their stop loss goes. They know where they'll take profits. And most importantly, they know how much they're willing to lose. Because once the trade is live, emotions take over. Fear starts whispering. Greed. And suddenly, you begin making emotional decisions. Your trading plan protects you from yourself. It keeps you disciplined. It keeps you focused. Remember this, the market is unpredictable, but your actions don't have to be. Write down your rules. Follow them consistently, because discipline creates consistency, and consistency creates results.
Rule number 5, avoid overtrading. One of the fastest ways to destroy a trading account is overtrading. Many beginners believe that more trades mean more money, but that's simply not true. Professional traders don't trade all day. They wait. They observe. They remain patient. Think about a sniper. A sniper doesn't fire every few seconds. He waits for the perfect opportunity. And the same applies to Forex trading. You don't have to catch every market move. You don't have to trade every single day. Sometimes, the smartest decision is to do nothing. Boredom trading, impulse trading, and forcing trades can cost you thousands of dollars. Remember, quality beats quantity. One well-planned trade can outperform 10 emotional trades. Be patient. Trust your setup. And let the market come to you. Rule number 6. Understand risk to reward. This rule can completely change your trading results, yet most beginners ignore it. Risk to reward simply means this: how much are you willing to lose compared to how much you expect to gain? Let's say you risk $50 to potentially make $100. That's called a 1-to-2 risk to reward ratio. For every dollar you risk, you're aiming to make $2. Now here's the powerful part. You don't need to win every trade. In fact, even if you lose more often than you win, you can still be profitable. Imagine taking 10 trades. You lose 6, but you win 4 trades that pay twice your risk. You can still end up making money. That's how professionals think. They don't focus on being right all the time. They focus on managing losses and maximizing profits. Stop asking yourself, how often can I win? Start asking, are my winners bigger than my losers? Because trading isn't about perfection. It's about probabilities. And once you understand that, everything changes. Protect your capital. Follow your plan. Overnight, it's built through discipline, one trade at a time. Here's a question. How can you improve if you don't know what you're doing wrong? Most traders never keep records of their trades. They win a trade, they celebrate. They lose a trade, they get frustrated. And then they move on without learning anything. Successful traders do something different. They keep a trading journal. They record every trade. Why they entered, where they exited, how much they risked, how they felt during the trade, and what they learned from the experience. Your trading journal becomes your personal coach. It reveals your strengths. It exposes your weaknesses. And over time, it helps you identify patterns. Maybe you trade better during certain market sessions. Maybe emotional trades are causing most of your losses. Maybe you're breaking your own rules without realizing it. You can't improve what you don't measure. Professional athletes review game footage. Pilots review flight reports. Successful traders review their trades. The market teaches lessons every single day. The question is, are you paying attention? Start documenting, start learning, and start growing. Because every great trader is also a great student. Rule number 8, trade only what you understand. One of the most dangerous habits in Forex trading is following other people's trades blindly. Someone on social media says, buy this pair. Another person says, sell immediately. And without doing any research, people risk real money. That's a recipe for disaster. Never trade something you don't understand. Learn how currency pairs move. Understand market structure. Study support and resistance. Know what economic news can affect the market. And most importantly, understand your strategy.
If you can't explain why you're taking a trade, you shouldn't be taking it. There's nothing wrong with being a beginner. Everyone starts somewhere. Use a demo account. Practice without risking real money. Make mistakes. Learn from them. Build confidence through experience. Remember, knowledge creates confidence. Confidence reduces fear. And informed decisions lead to better results. Don't chase signals. Build skills. Because skills can stay with you for a lifetime. Rule number 9, be patient and disciplined. We live in a world that wants everything instantly. Instant food, instant entertainment, instant success. But trading doesn't work that way. Forex is not a get-rich-quick scheme. It's a skill.
And like every skill, it takes time to master. There will be losing days. There will be frustrating weeks. There will be moments when you question yourself. That's normal. The traders who succeed aren't necessarily the smartest. They're the ones who stay disciplined. They follow their rules. They avoid emotional decisions. And they trust the process. Patience means waiting for the right setup. Discipline means executing your plan without hesitation. Success in trading isn't built through excitement. It's built through repetition, through consistency, through showing up every single day with the right mindset. Remember this: small improvements, repeated over time, create extraordinary results. Stay patient, stay focused, and trust the journey.
Because the market rewards discipline, not desperation. If there's one rule you remember from this entire video, let it be this one. Protect your capital. Because without capital, you can't trade. Many beginners enter the Forex market thinking only about profits. How much money can I make? How fast can I grow my account? But professional traders ask a different question. How much can I afford to lose? Because they understand something most people don't. Making money is important, but staying in the game is even more important. There will always be another trade, another setup, another opportunity, but only if you still have money in your account. Protecting your capital means never risking too much, using stop losses, avoiding emotional decisions, following your trading plan, and accepting small losses before they become devastating ones. Small losses are normal. Large losses are usually the result of broken rules. Remember this: the goal of trading isn't to win every trade. The goal is to survive long enough to let your edge play out over time. Protect first, profit second. Because successful traders think like business owners, not gamblers. Final recap: the 10 Forex trading rules. Before we wrap up, let's quickly review the 10 rules every Forex trader should live by. Rule number 1: never risk more than 1 to 2% on a single trade. Rule number 2: always use a stop loss. Rule number 3: don't trade with emotions. Rule number 4: have a trading plan and follow it. Rule number 5: avoid overtrading. Rule number 6: understand risk to reward ratios. Rule number 7: keep a trading journal. Rule number 8: trade only what you understand. Rule number 9: be patient and disciplined. And rule number 10: protect your capital above everything else. These rules may sound simple, but simple doesn't mean easy. The difference between successful traders and struggling traders is consistency. They follow the basics, even when it's difficult, because they know that long-term success is built. If you're serious about becoming a successful Forex trader, stop looking for shortcuts, stop chasing unrealistic promises, and stop searching for the perfect strategy. Because no strategy wins 100% of the time. The traders who succeed are the ones who manage risk, control their emotions, stay disciplined,
and keep learning. Remember, Forex trading is not a sprint. It's a marathon. There will be setbacks. There will be losses. And there will be moments when you want to give up. But every experienced trader has been there. The key is to learn from your mistakes, adapt, and continue moving forward. Master yourself, and you'll be one step closer to mastering the markets. If you found this video helpful, make sure to hit the like button. Subscribe to the channel for more trading education and practical Forex tips. And in the comments below, tell me which of these 10 rules you struggle with the most. I'd love to hear your thoughts. Thank you so much for watching. Stay disciplined, stay patient, protect your capital, and I'll see you in the next video.